Hi guys, welcome back to the channel. For those of you that don't know me, my name is Rebecca, and on this channel we talk through all things finance related. So today we're going to carry on with the introduction to bookkeeping mock exam, going from question number 6. So let's just get into it. Okay, so here we've got an invoice that's been received, and the details of the invoice show the purchase of 500 small bolts for £3.50, excluding VAT, and the VAT rate is 5%. So we need to calculate the amounts before the trade discount, then the trade discount, and also the final amounts payable. So pre-discount means before the discount. So first of all, we've got £3.50 times by 500. So that's going to give us £1,750 for the net amount. The VAT rate is 5%, so we're going to take 1,750 times by 0.05 because it's 5%, as you can see just here. So that's going to give us £87.50. And then what we're going to do is take 1,750 times by 1.05 to give us the gross amount. So what we're left with is £1,837.50. But I would say as you're going through this in the mock, make sure that you're checking your answers as you go along, because it's so easy to make a mistake. Now the trade discount amount is 15% of the net value of the invoice. And it's really key that you pay attention to that, because in the exam they could say that the discount is 15% of the gross amount. It might not be 15%, it could be a different rate, but we need to make sure that we're calculating it off the net. So we're going to take the 1,750 times by 0.15. That's going to give us £262.50. And then we're going to calculate the VAT and total off that. So that's going to give us £13.13 for VAT, as in 262.5 times by 0.05, and our gross is going to be £275.63. So to work out the post-discount amount that we're going to pay, we're going to take this net value of 1,750 minus the £262.50, and that's going to give us £1,487.50. And we're going to do the same for the VAT and the gross amount. So the total VAT that's going to be paid is £74.38. And the total post-discount gross amount, which is the amount we're going to pay the supplier, is £1,561.88. So that's how you answer that. But again, in this type of question, make sure that you're looking at the VAT rate percentage, because it won't always be 5%, and also the discount, and if that's on gross or net. So let's move on to question 7. So here we've got an extract from the sales day book, and what we've been shown here is 4 customers. So we've got an invoice from, we've got an amount from Silverline Office Supplies, Core Vista, Blue Peak and Trueform, and we've got totals. So we've got £3,000 gross here with our VAT and net, 315, 780 and 960. And then using the following table below, we need to show how the entries should be made in the receivables ledger accounts. So here, with receivables, so the receivable ledger control account or the trade debtors control account, whatever you want to call it. And again, that does change whether we're looking at UK GAAP or IFRS, so International Financial Reporting Standards. So these amounts here are assets to us because it's amounts that customers owe to us. And the totals that they owe are £3,000, £315, 780 and 960. And as you can see here, none of these are negatives. So we can quite simply copy this into here, like you can see there. And that is correct. So they're all debits because, again, they're assets, amounts owed to us, as opposed to liabilities. So let's move on to question number 8. Okay, so here we've been told to select the correct answer. So a company is introducing a coding structure to analyse different types of office furniture sold. They're currently selling the following items: desks, chairs, filing cabinets and bookcases. And their existing sales code starts with 8,000, and they want to expand the structure to allow for more detailed analysis in the future. So what they're saying there is that currently desks, chairs, filing cabinets and bookcases are all being coded to code 8,000, but they want to be able to break that down. So we need to select an appropriate code for them to start selling. So let's have a look. So we're going to go from the bottom here. So you could use 8,100, 8,200, 8,300 and 8,400, but you're leaving a huge gap between each nominal, and that doesn't really make much sense. So you would preferably want them to be sequential, as in the next number along. So I wouldn't recommend that one there. 8,010, 8,020, 8,013, 8,040. Same thing, so you're leaving tenths in between each nominal. And again, there's no reason to really do that. The next one, we've got 8,100, 8,101, 8,102, 8,103. That's more applicable, but again, why are we starting with the code 8,100 when the code that they're using right now is 8,000? It doesn't really make much sense logically. So I would say here that the codes to use would be 8,001, 8,002, 8,003 and 8,004 because they follow sequentially. Now, let's move on to question number 9. Now, a business has recorded the following totals in its purchase day book. So we've got a total gross of 9,600, VAT of 1,600, net of 8,000. The business has used a single purchase account and maintains control accounts for both receivables and payables. So which of the following shows the correct posting to the general ledger? So let's have a look. So we'll start from the top. Debit payables ledger control account, 9,600, credit VAT, credit purchases. Okay, now again, with this, we're looking at the purchases day book. So we're looking at amounts that we owe as a company out to the supplier. So it's not going to be, we're not going to be debiting the payables ledger control account with the 9,600. So we can rule that one out. Next, debit purchases 8,000, debit VAT 1,600 and credit payables ledger control account. I think that's probably going to be our answer here. So I'm going to green that up a second, but just look at the others. Debit sales, we're not going to debit sales, there's nothing to do with the purchase day book. Debit purchases 9,600. Well, we're not going to debit the gross value to the income statement, so that's why that's not correct. So the answer is B, because we're going to take the net amount in the purchase day book and debit that to purchases in the income statement. So that's going to be a plus, a positive figure. We're going to debit VAT 1,600 because again, that's an amount that's owed back to us. We can reclaim that back from HMRC, so it's an asset to us. And then we're going to credit payables ledger control account with £9,600. So that's question 9 done. So move on to question 10, the final question. True or false? The purchase day book is used to record credit purchases of goods and services before they are posted to the general ledger. So I'll give you a second just to think about that. The answer is true. And the reason that's true is because we do in fact record purchases of goods on credit in a purchase day book. So that's the end of today's video. I hope you found it useful and give it a like if you did, and I'll catch you on the next one.